Hello and good day to all friends. This is Mushtaba Rosti from the Thales team, and today is November 23rd, 2025. I'm here with the morning outlook on Bitcoin using the Thales Market Screener tool. Right from the start, let me say that we can expect an upward move toward around 87 to 88,000 based on the results. However, ultimately, we'll likely see a reversal downward in the coming days, probably toward 80 to 81,000. Let's take a look at this outlook in the market screener and see what the situation looks like. Well, as you can see in the image, trades from November 22nd up to now for the November 24th expiration have been filtered in the first database. At first, the possibility of movement in both directions can actually be seen, but when you move the slider forward, if we move forward and consider trades from yesterday at 2 p.m., we see that traders have become bullish in their outlook and want profits above around 89,000. Other important levels above include 92,000, 97,000, and 95,000, which, taking all trades into account, show a slight dominance in put buying. If we consider all trades from the beginning, put buyers are dominant, seeing profits below 82,500. But if we move the slider forward, basically bring the slider to the position you see in the image, this dominance of put buying shifts toward call buying, with their target at 87,000. The upward movement you're seeing on the chart right now seems to reflect the outlook of call buyers, which is currently being realized. Put buyers have also raised their targets to 83,600. However, call sellers have created a barrier against this upward movement, which is showing a ceiling at 82,700, and they are dominant. This dominance of call sellers is evident whether we consider all trades or if the slider is set midway. In both cases, we see that call sellers are prevailing. Call sellers have set a ceiling against this upward movement, while put sellers have considered the floor to be around 83,000. If we look at the process database closely, we can see that from the very beginning of the trades, a bullish trend is dominated. The floor of 84,000 has been observed, which you can see here was a support point, and we saw support there. Currently, we are moving toward the ceiling of 89,500. Notice that the midpoint for call buying gamma is also 89,500, and the ceiling considered for it is 94,000. To some extent, we can move up to the intersection of the gamma and delta curves, which is around 94,000. Ideally, we could move upward to that point. You can see the intersection of a seller's curve here. The upper agreement is at 88,500 and the lower agreement is at 82,000. None of these points are profitable, although the lower side is closer to profit. This document is mostly in loss, and both zones are areas of disagreement. Such a structure, especially on a holiday like today, mostly suggests a volatile situation, so we can expect some oscillating movement. In this slide, you can see that we've entered the points into the indicator. What's clear for tomorrow is that we expect increased volatility, meaning the two indicator bands have moved apart and we anticipate more volatility. Yesterday, as you might remember, we said that since the price had dropped sharply and surpassed the red band, and the momentum was very strong, a rebound up to the green band could be expected. That's exactly what happened, interestingly enough. First, we touched the red band, then we saw the green band. This touch of the green band could push the price up to 87,000 to 88,000, and then we might see a move downward. However, another interesting point is that the red band's downward movement isn't very strong, meaning the downward momentum has decreased compared to before, and has reached around 82,000. Interestingly, the current floor hasn't dropped below the previous floor, so we might not be facing a sharp decline. Especially if you also consider the RSI situation below, you'll see that we could still witness an upward movement for a while. Alright, let's move on to the next image. Alright, in the database again, it's been processed, and it doesn't really show a high trading volume for tomorrow. We've actually filtered trades of 10 Bitcoins and above, and you can see it still shows a volatile situation. However, considering the delta's influence, with the delta leaning upward, it seems that call options have a slight dominance, and in fact, this slight dominance could indicate a somewhat bullish sentiment. The largest contract among these is a 50 Bitcoin put purchase, which was entered yesterday at 1:30 a.m., targeting a strike price of $80,000. The most notable one, which is this first one, is the most prominent we see. It hasn't been realized yet. The market price movement has actually been against this trader's position. But, well, there's still time until November 24th, so according to that. The point we're discussing is that this scenario is possible, and for this trader as well, it's doable. We could go up to 87 to 88 and then see a move downward, maybe even down to exactly 80,000, though we can't say for sure. In the next image, you'll see that we've set the filter for November 28th, which is the end of the week and the end of the month, and we've considered trades above 20 Bitcoins. As you can see, the outlook is still completely bearish. The sentiment is still entirely bearish, and profits are seen below 81,300. The largest trade we have here, there are a lot of block trades, but there wasn't really a strategy among them. The biggest trade we have is a 350 Bitcoin put purchase with a strike price of 85,000 and 6 100 Bitcoin put purchases. We also have 6 100 Bitcoin put purchases with a strike price of 81,000, which, as we mentioned, their average comes out to 8,100 and 3,100. This position will be profitable below 8,300. This shows us that we can probably expect another drop by the end of the week. Now, whether this drop will break the previous low or not is another matter, but still, we can expect a correction and further decline, apparently. Let's move on to... Actually, let's look at the heat map of liquidity. The liquidity heat map makes the situation a bit clearer for us. In the 48-hour chart, you can see that the amount of liquidity is around 87%, and even a bit up to 88%, and it's present at the top. And is this liquidity currently closer to the price? And after that, you can see that the amount of liquidity decreases, but the concentration of liquidity on the lower side is relatively significant, especially in the range of 82,000 to 83,000, where you can see a high concentration of liquidity right at 83,000. It seems that, according to the same scenario we have, we can expect the price to first go up and hunt the upper liquidity and then move toward the lower liquidity. To sum up, if we want to conclude, considering that the data shows us that the outlook of call buyers is being realized, but the call sellers, in response to this move, have set a ceiling around 87 to 88,000, which, as you saw, matches the liquidity heat map. On the put seller's side, they've set a floor at 82 to 83,000. This situation basically shows us a volatile condition until tomorrow, but it seems that, considering the bearish outlook for the end of the week, any upward move will likely only reach around 87 or 88,000, and then we'll see a move downward to about 81 to 82,000. Of course, if we take the November 28th strategies into account, you'll see that even a target of 80,000 has been considered in some strategies, so we might possibly see those numbers as well. Thanks for your attention. Until the next afternoon analysis, goodbye.